Hello, everyone. Welcome to the Investing Iguana, the channel where we explore the fascinating world of personal finance, investing, and retirement planning. I'm Iggy, your friendly guide and host, and today we're going to talk about one of the most popular and lucrative investment vehicles in Singapore, S REITs. S REITs, or Singapore Real Estate Investment Trusts, are a type of collective investment scheme that allows you to own a slice of income-generating real estate assets without having to buy or manage them yourself. Sounds too good to be true, right? Well, not quite. In this video, we'll dive into the basics of S REITs, their benefits and risks, and how you can start investing in them today. But before we get started, please do me a favor and smash that like button, subscribe to the channel if you haven't already, and turn on the notification bell so you don't miss any of my future videos. And if you have any questions or comments about S REITs or anything else related to investing, feel free to drop them below and I'll try to answer them as soon as possible. Alright, let's get into it. What are S REITs? As the name suggests, S REITs are REITs that are listed and traded on the Singapore Exchange, SGX. REITs, or Real Estate Investment Trusts, are entities that pool money from multiple investors to invest in a portfolio of real estate assets. These assets can range from office buildings, shopping malls, warehouses, healthcare facilities, hotels, and even data centers. By investing in REITs, you can gain exposure to a wide variety of real estate markets without having to deal with the hassles of property ownership. The concept of REITs originated in the United States in the 1960s as a way to democratize access to real estate investments that were typically reserved for institutions and high-net-worth individuals. Singapore embraced this model in 2002 with the listing of Capital Mall Trust on the SGX. This marked the inception of S REITs, providing retail investors like you and me the opportunity to participate in the growth of the real estate sector. Why invest in S REITs? There are many reasons why S REITs are attractive investments for both novice and seasoned investors. Here are some of the main benefits of S REITs. A. Diversification. One of the key advantages of S REITs is that they offer diversification for your portfolio. By investing in S REITs, you can access a variety of real estate assets across different sectors, geographies, and tenants. This reduces your exposure to risks associated with investing in a single property or market. For example, if one property suffers from low occupancy or rental rates due to market conditions or competition, it will not affect your entire portfolio as much as if you owned that property directly. B. Liquidity. Another benefit of S REITs is that they are highly liquid investments. Unlike owning physical properties, which can take months or years to sell or buy, S REITs trade on the SGX like stocks. This means you can easily buy or sell them at any time during market hours with minimal transaction costs. You can also adjust your position according to your risk appetite and investment goals without having to worry about legal fees, stamp duties, or other expenses involved in property transactions. C. Income generation. Perhaps the most appealing benefit of S REITs is that they generate a steady stream of passive income for investors. By law, S REITs are required to distribute at least 90% of their taxable income as dividends to their unitholders every year. This means you can expect to receive regular payouts from your S REIT investments regardless of their share price performance. The dividend yield of S REITs is also typically higher than that of other stocks or bonds, making them ideal for income-seeking investors. D. Capital appreciation. In addition to income generation, S REITs also have the potential for capital appreciation over time. Similar to stocks, the value of S REITs can also increase over time as the underlying properties appreciate in value or as the REITs acquire new assets or improve their existing ones. This can result in higher net asset value, NAV, and share price for the S REITs, giving investors capital gains on top of dividends. Of course, this also depends on various factors such as market conditions, supply and demand, interest rates, and the quality and performance of the REIT's management. If you plan to invest in S REITs, you should try to understand the REIT rules or laws in Singapore. Navigating the world of investments requires a deep understanding of the rules and regulations that govern various asset classes. In the case of Singapore Real Estate Investment Trusts, S REITs, the rules set by the Singapore Exchange, SGX, play a pivotal role in shaping their attractiveness as an investment option. These rules create a conducive environment for both investors and S REITs, fostering a relationship of trust and growth. The Singapore Exchange has established a comprehensive set of listing rules that govern the formation, operation, and conduct of S REITs. These rules not only enhance transparency and accountability but also contribute to the overall appeal of S REITs as a viable investment vehicle. Here's a closer look at why SGX listing rules make S REITs stand out. 1. Rigorous regulatory framework. SGX listing rules for S REITs are designed to ensure that these investment vehicles maintain the highest standards of governance and transparency. This instills confidence in investors, as they can rely on accurate and timely information about the financial health and operations of the S REITs they are considering. 2. Financial prudence. S REITs are required to adhere to financial standards that promote stability and sustainability. This includes maintaining a low level of leverage, which reduces the risk of overextending and enhances the ability of S REITs to weather economic downturns. This financial prudence reassures investors that their investments are being managed responsibly. 3. Distribution requirements. One of the key attractions of S REITs is their commitment to distributing a significant portion of their income as dividends to unit holders. SGX listing rules mandate that S REITs distribute at least 90% of their taxable income to enjoy tax benefits. This aligns the interests of investors and S REITs, making them an appealing option for those seeking a regular stream of income. 4. Independent trusteeship. S REITs are required to appoint independent trustees who oversee the interests of unit holders. These trustees act as safeguards, ensuring that the decisions made by the S REIT's management are in the best interest of the investors. This level of oversight contributes to the credibility of S REITs and fosters a sense of trust among potential investors. 5. Investor protection. The SGX listing rules prioritize investor protection by mandating clear and comprehensive disclosure of information related to S REITs. This includes details about the underlying properties, financial performance, management structure, and risk factors. Investors can make informed decisions based on accurate and comprehensive information. 6. Growth potential. SGX listing rules also accommodate the growth and expansion of S REITs. As S REITs acquire new properties or assets, they have the opportunity to offer investors exposure to diverse real estate sectors and geographical locations. This enhances the potential for capital appreciation and income generation. How to invest in S REITs. Now that you know what S REITs are and why they are attractive investments, you might be wondering how you can start investing in them. Well, the good news is that investing in S REITs is relatively simple and straightforward. Here are the steps you need to follow. Step 1. Open a brokerage account and a CDP account. The first step to invest in S REITs is to open a brokerage account with a licensed broker in Singapore. A brokerage account is an account that allows you to buy and sell securities such as stocks and REITs on the SGX. You can choose from various brokers such as DBS Vickers, OCBC Securities, UOB Kay Hian, CGSCIMB, Maybank Kim Ang, Phillips Securities, and more. Each broker has its own fees, features, and platforms, so you should compare them and find one that suits your needs and preferences. In addition to a brokerage account, you also need to open a central depository (CDP) account with the SGX. A CDP account is an account that holds your securities in electronic form and facilitates the settlement of your trades. You can open a CDP account online or by mail using your SingPass or by filling up an application form. You only need one CDP account regardless of how many brokerage accounts you have. Step 2. Fund your brokerage account. The next step is to fund your brokerage account with enough money to buy your desired S REITs. You can do this by transferring money from your bank account to your brokerage account using various methods such as Fast, Gyro, or check. The amount of money you need depends on the price and quantity of the S REITs you want to buy, as well as the fees and charges involved in the transaction. Step 3. Choose your S REITs. The third step is to choose which S REITs you want to invest in. This is perhaps the most important and challenging step, as there are many factors to consider when selecting S REITs. Some of these factors include the type and quality of the properties owned by the REITs, the occupancy rate and rental income of the properties, the growth potential and diversification of the portfolio, the financial performance and stability of the REITs, the dividend yield and payout ratio of the REITs, the valuation and price-to-book ratio of the REITs, the debt level and interest coverage ratio of the REITs, the track record and reputation of the REIT's manager. You can find information about these factors from various sources such as annual reports, financial statements, analyst reports, news articles, websites, blogs, podcasts, and more. You can also use tools such as StockFacts or SGX Screener to filter and compare different S REITs based on various criteria. Alternatively, you can also invest in exchange-traded funds, ETFs, that track the performance of a basket of S REITs. For example, you can invest in Lion Phillip S REIT ETF or Nikko AM Straits Trading Asia x Japan REIT ETF, which are ETFs that replicate the returns of indices composed of selected SREITs. This way, you can gain exposure to a diversified portfolio of S REITs with a single transaction. Step 4. Place your order. The final step is to place your order to buy or sell your chosen S REITs or ETFs through your brokerage platform. You can do this online or by phone or mobile app depending on your broker's options. You will need to specify the following details when placing your order: the name or code of the S REIT or ETF, the quantity or amount you want to buy or sell, the price you are willing to pay or accept, the type of order, market order or limit order, the validity period of the order, day order or good till date order. Once you place your order, it will be sent to the SGX for execution. If your order is matched with another buyer or seller at your specified price, it will be filled and confirmed by your broker. You will then receive a contract note from your broker detailing the transaction. Your S REITs or ETFs will be credited to your CDP account on the settlement date, which is usually 2 business days after the trade date. Your dividends will also be paid to your bank account or CDP account depending on your preference. That's it for today's video, folks. I hope you learned something new and useful about S REITs and how to invest in them. S REITs are a great way to diversify your portfolio, generate passive income, and benefit from capital appreciation. However, they are not without risks, so you should always do your own research and due diligence before investing in them. If you enjoyed this video, please give it a thumbs up and share it with your friends and family who might be interested in S REITs. And if you haven't already, please subscribe to the channel and hit the bell icon so you don't miss any of my future videos on personal finance, investing, and retirement planning. And as always, feel free to leave your comments or questions below and I'll try to answer them as soon as possible. Thank you so much for watching, and I'll see you in the next video. Until then, happy investing.